Well, Carnival Corporation just made some serious waves with its latest earnings report, and let me tell you, it is a big one. They announced a record-breaking first quarter. So today, we're going to dive deep and break down exactly how the world's largest cruise company pulled this off and what their ambitious new game plan means for the future of travel. You always have to ask the big question. In today's kind of crazy global market, how does a giant like Carnival not just stay afloat, but actually surge ahead like this? Let's get into it. And boom, here's your answer, right from their own report. It's powerful, it's direct, they hit record first quarter operating results and record bookings. You can't get much clearer than that. This was an absolute blockbuster of a quarter for them. And here's the take from the top, from CEO Josh Weinstein. He mentions healthy fundamentals and solid execution. Now, what that really means is this wasn't just some lucky break. Nope. This is what happens when massive customer demand meets a team that is just firing on all cylinders. So what does a record result actually look like in dollars and cents? All right, let's get into the headline numbers because honestly, they are seriously impressive. First up, revenue. We're talking a staggering $6.2 billion. That is a record for the first quarter, and it just goes to show you the incredible amount of cash flowing in from tickets, all that onboard spending, the whole shebang. Now this is where it gets really interesting. Customer deposits hit nearly $8 billion. Now remember, this isn't just money they've already earned. This is cash in the bank for cruises that haven't even happened yet. It's a massive vote of confidence from all of us, from consumers, and it's a huge sign that demand is not slowing down one bit. And they didn't just meet their financial targets, they sailed right past them. Wall Street analysts, the folks who do this for a living, they were expecting adjusted earnings per share of 17 cents. Carnival delivered 20 cents. Now, that might seem like a small difference, but beating expectations like that, it sends a huge signal to the market that the company knows what it's doing. Okay, those are some powerful numbers. But the real question is, how exactly did they pull this off? Let's decode the specifics behind these incredible results. All right, first, a little bit of financial jargon busting. You're going to see terms like adjusted EPS in these reports. They fall into this category, non-GAAP. Just think of it as the company's way of showing their performance, kind of stripping out a few things to give what they feel is a clearer picture of the core business. It's totally standard, but it's important to know. And when you look at those metrics, you can see they just kept on winning. I mean, look at net yields. That's a key number for how much money they make per passenger. They predicted 1.6% growth and delivered 2.7%. That is a huge beat. It means they're just making more money from every single guest than they thought they would. At the end of the day, you can have all the fancy metrics in the world, but it all comes back to this one simple fact. People really, really want to go on cruises. Bookings for the year are up by double digits, which puts them in the best booked position in their entire history. Wow. But even on a record-breaking journey, you're going to hit some choppy waters. It wasn't all sunshine and calm seas. The company definitely had to navigate some pretty big financial headwinds. This slide really just captures the story of the quarter perfectly. On one side, you've got this massive tailwind of record demand just pushing them forward at incredible speed. But on the other side, you've got a fierce headwind, the rising cost of fuel, which, as you can imagine, is one of the biggest bills for any cruise line. And that headwind? It has a number. We're talking over $500 million. That's the negative hit they're expecting from higher fuel prices for the entire year. That's a massive cost they had to figure out how to absorb, which honestly makes their amazing performance even more remarkable. So you've got this incredible quarter in the bag, but you've also got this huge fuel cost problem on the horizon. So where do you steer the ship next? Well, Carnival answered that with a bold new long-term plan, and you're calling it PROPEL. So what is PROPEL? Well, it's an acronym, and it stands for Powering Growth and Returns Responsibly. And this isn't just about the next few months. This is a multi-year roadmap designed to take the whole company to the next level by 2029. And when they say ambitious, they are not kidding. They're aiming for a 16% return on invested capital. That's a key way to measure how well they're using their assets to make money. They also want to slash their debt and, at the same time, grow their earnings per share by over 50%. It's a really bold strategy that promises both huge growth and much better financial health.
So, how are they going to hit all these crazy targets? Well, the entire PROPEL strategy really hangs on one simple idea: drive even more demand to their amazing portfolio of cruise lines and destinations. They believe their ships and the experiences on them are the ultimate engine for all this future growth.
Okay, we've seen the record numbers and we've seen the ambitious new plan. But let's bring it all home. Why does any of this actually matter to an investor? Let's connect the dots from all this corporate strategy stuff right to shareholder value. Walt, the CFO, David Bernstein, pretty much spells it out for us right here. The company is making so much cash right now that they're actively buying back their own stock, which is one of the most direct ways to return value to the people who own the company, the shareholders. And we're not talking about a small gesture here. The first chunk of this buyback program is a cool $2.5 billion. This is a real, tangible result of their record-breaking performance. They're turning all that success on the high seas directly into returns for shareholders. So that's where we land. You've got this perfect storm of record demand, a brand new, super ambitious strategy, which leaves us with one big final question. Is Carnival's combination of momentum and planning going to set a new high watermark, not just for them, but for the entire travel industry? Well, I guess we'll just have to wait and see.